Welcome back everyone. This week on the tape, an AI shakeout, an 8% single day reversal and the fund that blew up the exact bottom. Let's get into it. Subscribe if you haven't, watchlist is pinned as always in the comments. The week started quiet. Monday everything was fine, Tuesday hit. Stocks dropped 4.5%, Wednesday another 5%. 12% from the highs in 2 days. Names that had been leading all year, NVDA, AVGO, AMD, got taken out behind the wood sheet. People started saying a bubble. People started calling top. Here's what matters. It wasn't the fundamentals that broke. It was the positioning. AI had been the most crowded trade on the planet for 2 years. When sentiment shifts, everyone runs for the same door. That's not a bubble popping. That's what happens when a trade gets too crowded too fast. Then, the first day happened. SOX explodes 8% in a single session. 8%. Equipment names leading the charge. LRCX up 20%, AMAT up 15%. Why? Two things. First, China's stimulus out of the Politburo meeting, big unexpected market friendly. Second, after a 2-day 10% dropping, the short side was packed. A little good news, a lot of short covering, and boom, you get an 8% rally. But here is the problem. An 8% rally sounds great until you remember the index dropped 10% in the 2 days before. Do the math. We are still down, and on the charts the SOX closed at 11.311, still 400 points below the short-term line at 11.75.6. That's not a reversal, that's a bounce. A big bounce, sure, but a bounce, no need less. Now, let's talk about the story everyone's been sharing. The 25-year-old former OpenAI researcher who ran an AI hedge fund. Leopold Aschenbrenner. His fund, Situational Awareness, was up 439% last year. Billions under management. He was leveraged long AI names all in. Then this week happened. Margin calls, forced selling, the entire fund liquidated. Sold the Citadel at the bottom. The guy was right about AI. He was right about the trend. He was dead wrong about leverage. That's the take this week. Not about whether AI is real or not. It's about what happens when you're right. But you're too early and too leveraged. Direction doesn't matter if you can't survive the path. Now, what about next week? 2 levels you need to watch. First, the SOX index. Can I reclaim 11.756, the short-term line? If yes, the bounce has legs. If no, we are looking at lower lows, simple as that. Second, NVDA closed at 200.75, sitting right on the long-term line at $199. That's the floor. If it holds, we test 205. If it breaks, watch out below. If it were me, I'm not chasing this. Not after an 8% single day move. I'm waiting for either a pullback to support or a clean breakout with volume. Either one gives you a trade with a clear stop. Chasing an 8% rally after a 10% drop, that's not trading, this is gambling, guys. 2 setups I'm watching next week. One will be NVDA on a pullback to $199, the long-term line. If it gets there and holds, that's your long entry. Stop at 195, target 210, clean risk, clear reward. Number 2, the SOX itself. If it reclaims 11.756 on a daily close with volume, that's confirmation the lows are in. You buy the semis. You ride the reversion. Stop back below 11.400. Both setups require patience. And in this market, patience is the edge. One last thing before we wrap. The Leopold story isn't just a headline. It's a reminder. The smartest guy in the room, the 439% return, the billions in capital, none of it matters if you blow up on one drawdown. Risk management isn't sexy. It doesn't make headlines. But it is the only thing that keeps you in the game long enough to be right. That's the tape. Trade safe, guys. See you on the next one.